Hey guys, and welcome to the Working Money Channel. All right, so Bitcoin has moved on from depression to boredom and indifference. Historical volatility has dropped to extreme lows for the first time this cycle. So guys, this is coming from CryptoCon here. He continues by saying every time this has ever happened, we have been bullish. So this is the latest for the Bitcoin trend, guys. It's been slowly moving up throughout 2023 into 2024, and now finally into 2025. We are just waiting for that final blow off top, similar to what we saw at the end of 2020 into 2021, and also for the entirety of 2017, like you can see in and around here. We also did see something kind of similar back in 2012. But here you can see the volatility indicator down here. We are seeing very low volatility, similar to what we saw in previous cycles. And guys, this time it is no different. So critically low volatility now for Bitcoin, and it's just really been grinding. I've got XRP up here on the 1 hour chart. We've been discussing that most recent dip and how, cryptocurrencies are actually faring quite well when you compare them to, traditional markets like the S&P 500. Of course, there's the macro events that are occurring at the moment. Trump tariff talks. Now we've got this new trend coming about China manufacturing TikTok. Have you guys seen that? Oh boy, it's getting messy out there. Stock markets have rebounded a little bit. Again, this is the S&P 500 on the hourly, but really we're in it here for the crypto. So back to XRP here, you can see the trends have actually moved up for XRP specifically. We do need to get above, well, for starters, it'd be nice to get up above $2.60. That's $2.59. So that would be the first level. You can see where that tapped out back in March of 2025. Former resistance. If we can build support on that, I think, that's a step in the right direction. But again, it's just been grinding to the upside. Bitcoin has been doing the same. So Bitcoin just been grinding. I mean, we got past this neckline. So hopefully we continue to build support. You guys, I didn't mention it on the XRP chart, but we were doing the same thing on the XRP chart. So now Bitcoin's building support. Right now, one Bitcoin is trading for currently 85,200. But really, we need to get above 88,000. I think that is the next critical level here for Bitcoin to continue to grow. And if we can build a serious support down in and around 88,007, I think we are in good shape. So it's still just kind of slugging away. Again, we're seeing low volatility here. Chart is just moving up slowly, but everything is intact and we're just waiting for that pop off top. For more information on what I'm doing this particular bull run, again, follow me at patreon.com/workingmoneychannel. I'm sure you guys know what I do over there by now. And if you don't, in a nutshell, I'm basically opening up my trading portfolio, letting everybody in on my trading journey, a more detailed analysis from Working Money Channel as to where I think this market is going. You guys can see we haven't really budged from fear and greed. We're still sitting at 31, which is pretty good considering where we have been in the recent past. Market cap is flat. You rarely see that. Coins are not really doing too much. Again, that low volatility is really affecting the market. But M2 money supply, guys, that is still climbing and it's not stopping. So this is another great indicator to suggest that we will see that burst of liquidity entering the market. We're still waiting on a few factors here. So this courtesy of Chad Steingraber, M2 money supply still climbing and not stopping. Leading indicator for crypto. So guys, he's saying there's only one way to go, and that is up. All these factors really do have to come into play before we do see a major cryptocurrency rally. But guys, all the pieces of the puzzle are coming together. And for those asking about Paul Atkins, okay, this courtesy of Eleanor Turret, Paul Atkins hasn't taken his seat yet at the SEC. There are still a few procedural steps before he can officially start, including President Trump signing off on his appointment and the formal swearing in. This could happen anytime over the next few days, so stay tuned. So we don't have any clear date as to when the formalities are going to occur, clarifying that Trump's sign-in is purely procedural, essentially a ministerial function, just part of the standard process and paperwork. So we're still just waiting for the new head of the SEC to join. That is another piece of the proverbial puzzle. And as Matthew Piepenburg told me bluntly, Santa Claus cannot solve the liquidity crisis. So the bigger elephant in the room is that we are staring down the barrel of a liquidity crisis. Gold is seeing new all-time high prices. Here, let me just bring up the gold chart here. So gold is really rocking and rolling. We have recently seen a dip, but just the other day it was trading just above $3,200 per ounce. What does this mean for the US dollar? I'm going to play you guys a few clips today, just kind of going over the macro picture when it comes to US dollar dominance, when it comes to gold. In relation to that, this is a clip of Matthew Piepenburg from the Gold Telegraph. Listen to this.
Don't be fooled by all these headlines and all the debates, left versus right, Trump stupid, Trump genius, Trump crazy. We could make the case for each, but the real problem is, I've said this many times, Santa Claus can't solve a liquidity crisis when you're $37 trillion in public debt and over $100 trillion in household, corporate, and public debt. There's too much debt. There's not enough grease to keep those debt wheels going without bazooka money, without debasing the currency. This falls right in to the hands of gold, just because gold sits there and holds its value while paper money is in a sea of fiat, sea of misery.
So as Peipenberg is saying, gold is really set up to continue to thrive as the US dollar. Well, that remains questionable. As I mentioned, gold has been seeing new all-time highs, and the dollar is currently being affected by, what's going on with the tariffs and other socio-political economic factors. Here's another clip of Jim Rickards, suggesting how gold could reach $10,000. Now, he goes about it in a bit of a roundabout way. This courtesy of Mr. Mann. Listen to this.
But a lot of the gold bugs go, well, here's what's going to happen. China's going to get all this gold, build their own infrastructure, the AIIB. They're going to make the yuan a gold-backed currency, and they're going to announce this as a big surprise and run the dollar off the road, and the price of gold is going to go up to $10,000 an ounce. Gold is going to go to $10,000 an ounce, but not for the reason I just described. Everything I just described is exactly what's not going to happen. What China's doing, China wants to be in the club. We're in a club, right? You're probably all members of clubs. China wants to be in the big club, which is the IMF, the United States. They want to be in that club. But the US is holding a black ball. We're like, well, we might let you in our club, maybe we won't. What kind of behavior can we expect from you? In other words, we're using that as a quid pro quo. So China is over here building their own club. A lot of clubs in the United States were started because some wealthy applicant couldn't get in the existing club. He said, heck with you, I'll build my own club, right? And that becomes exclusive. So China's doing both things at once. They want to get in the existing club, but just in case they can't, they're building their own club. So they're much more subtle, much more sophisticated. Now, what is the United States saying as the price of letting China in the club? And again, to the gentleman's question, putting the Chinese yuan in the SDR and giving China more votes at the IMF, which is what they want, that's what's in play. The Congress is holding up the legislation to give China more votes. And the White House says, those Tea Party guys in the House, you can't reason with them, they're standing in the way. Nonsense. You don't think if the White House wanted this, they could get it through? Barney Frank slipped a $100 billion line of credit for the IMF in a defense appropriation bill in 2009. Believe me, if the White House wants it, they could get it done. But it's very convenient for the White House to blame the Tea Party, so then they go to the Chinese and go, this crazy Tea Party people, they're standing in the way. They're not. The White House is deliberately slow-rolling this so they can get concessions out of China. What's the concession? They want to peg the yuan to the dollar. They want China to stop fighting the currency wars. They want China to stop promoting their economy and growing their exports by cheapening their currency. If you notice, Chinese economy is collapsing. I mean, their growth is coming down really fast. It's not falling off the face of the earth, but they're down from 10% to 8% to 7%. They're probably going to come in below 7%. Bad debts are piling up. The Shanghai stock. There's a lot of trouble on the waterfront in China. China would normally just cut their currency, promote their exports. They haven't done that. A lot of people are short the yuan. I think they're going to be disappointed. China's maintaining the peg to the dollar. That's the price of poker. That's what the U.S. wants to see. So the U.S. is saying to China, hey, if you guys are on your best behavior, we'll let you into the yuan. That will probably probably be announced in October at the October annual meeting of the IMF. It's in Lima, Peru this year. And then be effective January 1st. So now China's in the club. At some point, they'll slide this legislation through Congress. China will get more votes than the IMF. But what won't happen is China will reveal their gold, and the price of gold will skyrocket on that news alone. Again, gold's going to go up, but for different reasons at a different time. Because the deal with the club is you have to have the gold. You have to have the gold, but don't talk about it. The gold is plan B. Paper money is plan A. And the United States is saying to China, you want to be in the paper money club, that's fine, come on in. We'll give your paper money a seal of approval by including it in the SDR. The fact that you have 7,000 to 8,000 tons of gold is great. That's your admission price for getting in the club. By the way, the U.S. and others have been working together to keep the price of gold down until China can get their gold. Once China gets their gold, they're in the club, and then nobody talk about it. So this is a lot deeper. And again, this is not conspiracy stuff. You can tease all this out of available information.
Things that make you go, So hard to get this straight. China wants in the IMF, but there are certain rules that they have to go by. In order for the Chinese yuan to get the seal of approval, gold is the admittance fee, but we don't talk about gold because we still want to be on a paperback system. Boy, there's a lot to unravel there, but I wanted to thank Mr. Mann for that because, if we're talking about fiat currency in the paper money game, the US dollar, it sounds like the IMF wants to keep it propped up. Now, Smoke did just post this. XRP exhibits the lowest correlation with other cryptocurrencies, including Bitcoin and Ethereum. So this is going to make sense in a second. While BTC and Ethereum show signs of a value bubble, XRP does not, driven instead by its technology superiority. So if we are going to move stablecoins eventually over the XRP ledger or what have you, XRP, guys, is going to be a good cryptocurrency for it. I mean, Brad Garlinghouse has gone on record in the past saying it doesn't really matter if XRP is volatile or not because the transactions happen so quickly anyway. But guys, this report was just out by Wisdom Tree suggesting XRP not as correlated to Bitcoin and Ethereum. And so they're saying down here, interesting to note, and as seen in figure 3 above, Bitcoin and Ethereum are strongly correlated with each other, while XRP has low correlation with both of them. So Wisdom Tree is noticing this. They're also mentioning it in this chart as well. Correlations, XRP exhibits the lowest correlation with other cryptocurrencies. And I will link all of this in the description of the video if you guys are interested. They say that Fry, who researched this report here, practiced rational bubble model for cryptocurrencies, or cryptocurrencies, 2 words there, and detected bubble in Bitcoin and Ethereum, while no bubble was detected in XRP. He explains that the reason why no bubble exists in XRP stems from technological superiority of Ripple over Bitcoin. So we know the reasons why XRP is better, of course. We know why XRP is going to be chosen to move stablecoins over the XRP ledger. But are the discussions too flat? Okay, this courtesy of the Wrath of Kahneman. He's saying the discussions of RLUSD and XRP are too flat. Will stablecoins take some of XRP's utility away? Many Ripple employees have always maintained that XRP is never going to be cannibalized by the RLUSD. Wrath of Kahneman, though, coming up with some other theories. I mean, stables are less volatile. They can be transferred peer-to-peer without XRP. I mean, quite frankly, you can send RLUSD or USDC or whatever you want to somebody else. You don't really need XRP for that. He says, though, and no, XRP burn fees aren't significant, but XRP always plays a key role via auto-bridging. If you don't understand this, you don't grasp the XRP ledger. Without a direct path from the RLUSD to another currency like the euro, the system automatically uses XRP to bridge the gap. It means XRP helps source liquidity behind the scenes, even for stablecoins. So going from one type of stablecoin to another, you definitely need the liquidity to transfer those. Currency use depends on liquidity, and XRP provides that. Stables and XRP are not replacements for one another. A very thought-provoking comment there from the Wrath of Kahneman. I wanted to thank him for that. Because on the heels of that, guys, we're now officially getting the news here from Cassie Craddock of Ripple. She's Ripple's managing director for the UK and Europe. She has now confirmed that euro-backed stablecoin, the one that we were talking about, when you go to RLEUR.com in any web browser, that just redirects you to the Ripple website. I did a video on that a couple of months ago, which I will link up here in the top right-hand corner. Well, guys, it's official. It's coming out. Listen to this.
I think what's really been interesting from a Ripple perspective, I'm responsible for Europe, and I think what we've seen over the last year, 18 months, 2 years or so is MiCA has really given banks and financial institutions this level of certainty to be able to lean into the blockchain and digital asset space. And so we've seen some really great innovative use cases on the back of that. So, we partnered with SocGen Forge, one of the leading banks here in France, firstly around custody, but now more broadly on issuing their Euro CV stablecoin on XRP Ledger. There are many other use cases that we're partnering, our customers are partnering with us on around money market funds and bringing those on chain. And we're actually seeing that trend continue to increase as we start to see more institutional interest in this space. On the Ripple side, we're solving kind of the trapped liquidity issue with our cross-border payment product and enabling financial institutions to better service their customers by enabling them to have instant real-time payments through a kind of network of partners that enables to move cash from A to B. Now that could be physical cash, it could be stablecoins, it could be using XRP. And I think that's a really interesting, use case that we've seen mass adoption over the years from. And then just generally speaking, I think from our perspective, solving that cross-border payment problem was a first step. Doing that and building the infrastructure to be able to do that in a sophisticated way for banks and financial institutions just led us down the path of owning that kind of end-to-end digital asset infrastructure. And so the custody technology was really critical for us to acquire back in 2023 because we know that custody is the entry point. Before you do anything in digital asset, whether you're thinking about tokenization, whether you're thinking about payments or thinking about NFTs or whatever you're thinking about, you need to get your custody right and you need bank-grade custody. And so that critical piece of infrastructure is something that's now enabling us to partner with banks and financial institutions for them to tokenize, for them to create use cases that maybe we don't want to lean into, but to be able to use our technology to do that. I think it's really important, and Adelia and I, we work, given that we're the largest developer on the XRP ledger, Ripple wants to solve institutional financial use cases, right? But we want to create ecosystems where developers are pushing the boundaries, and I think that's been really interesting to see how these developers or these financial institutions leverage our technology to be able to, I guess, drive the future of financial services forward.
Okay, I'm going to leave it there. A great clip here of Cassie Craddock, Ripple's managing director of the UK and Europe. So she just dropped a huge bomb, though, euro-backed stablecoin coming to the XRP ledger. Of course, she does describe how Ripple did get into the custody game in 2023. And it was all planned. You need to set up the infrastructure in order to deliver the final product. So now we've got a euro-backed stablecoin running on the XRP ledger, or will be. We have the RLUSD. Of course, it has been identified that XRP does not correlate with Ethereum and Bitcoin, which is a good thing, and that was by WisdomTree. Of course, WisdomTree did recently, or has applied recently, for an XRP ETF. So that all checks out. That makes sense. We've got Jim Rickards here talking about the price of gold going up and how, the story is a little bit more complicated than it might seem at first glance. Then we have Matthew Peipenberg here talking about a liquidity crisis and, how gold is going to play a big role in that. Now, I've got one more clip here of Jim Rickards that I wanted to show you guys, courtesy of Mr. Man. How to kill a currency without anyone noticing, so the IMF can issue SDRs to emerge economies to allow for a supranational currency. And guys, what supranational currency could it be? I mean, it seems obvious to me.
But if you can inflate the currency, then it is. The United States owes $17 trillion. How do you turn $17 trillion into $8 trillion? Cut the value of the dollar in half. So it's still nominally, it's still $17 trillion, but it's only cost you $8 trillion. I'm sure you know the oldest joke in banking is, if I owe you $1 million, I have a problem, but if I owe you $1 billion, you have a problem because you got to collect. I can just walk away. I can say sleep in the next day. But we owe China $4 trillion. That means they have a problem. Because we could just say, hey, China, here's your $4 trillion, good luck buying a loaf of bread because we just printed it. And that's an extreme version of kind of where the elites need to get the world. And when I say elites, again, it's not a conspiracy. These are people we know. These are finance ministers, professors, Madam Christine Lagarde at the IMF, Jack Lew, Tim Geithner. They're people we know. So this is where they're taking the world. So the orderly diminution of the dollar, substitution of SDRs, because let's just say that, and I think this will happen, by the way, the IMF printed $5 trillion of SDRs. That would be about $6.5 trillion equivalent. They print $5 trillion of SDRs and hand them out to all the countries. And then countries all of a sudden had, could buy imports because they could use the SDRs to buy them. Maybe they were running a trade. Maybe they were running a trade deficit. Maybe their reserves were low. Foreign reserves are just your bank account, right? You make $100,000 and you spend $80,000 and you put the $20,000 in the bank, that's your savings. Well, reserve positions of countries are just their savings accounts. You export a certain amount, you import a certain amount. At the end of the day, you have a surplus or a deficit, and if you have a surplus, those are your reserves. You go invest them someplace the same way you do. And if you have a deficit, well, you better borrow the money because how else are you going to pay it off? So let's say a country is running a trade deficit and their reserves are low. But I give them a bunch of SDRs. Well, they can go buy stuff. They can buy Caterpillar tractors, they can buy oil, they can buy all kinds of stuff. So that's how you get the economy rocking and rolling again.
This clip goes on for about another minute and a half. Essentially, what he is saying is by inflating, and this is what the powers that be want to do. They are devaluing your dollar, but it can't last forever. I mean, they're going to try to prop up the fiat system for as long as they can. It goes back to this concept of how gold is going to get to $10,000 per ounce. This is the prediction from Jim Rickards here. The fact that gold is going to continue to be that financial anchor for countries after the fiat system becomes obliterated. Jim Rickards keeps saying it's not a conspiracy. We know these people and they want to push us in that direction, and they're currently doing it at the moment. He later talks about the concept of inflation. If you do this over 2 generations, it's like 2% per year, and you almost don't feel it. But guys, ask a grandparent or great grandparent if they're still alive how much a loaf of bread cost in the 1920s, 1930s, 1940s, 50s, whatever it is. Eventually, the system won't hold up. We are going to need a supranational currency like XRP, and that's going to be the backstop to all currencies without needing an intermediary middleman. This is why Ripple wants to tokenize everything. This is why we've got Cassie Craddock here explaining, how Ripple is setting up their infrastructure to be basically a one-stop shop for custody, for tokenization on the XRP ledger. Now we've got a brand new euro-backed stablecoin confirmed by a Ripple employee. So how are you guys feeling at the moment? Remember, cryptocurrencies like XRP are an emerging asset class. The real-world utility cryptos are the ones that we should be eyeing for the future. And if you guys are interested in seeing what I'm holding, what cryptocurrencies I've accumulated over the years, there are some real-world utility coins. There are some coins that I think are going to pop based on, other fundamental factors. I'm going to be letting my Patreon subscribers know where I'm going to be cashing out, opening up all my portfolios, legacy portfolio, which does include XRP and Bitcoin, etc. You can follow all that at patreon.com/workingmoneychannel. And please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.